The biggest mistake most traders make isn't about entries, it's about what they focus on. Ever noticed how some traders with clean naked charts make consistent profits while others drawn in a lot of indicators and still can't see what price is really saying? This was me years back until I realized something shocking. Indicators follow price, not the other way around. Everything about my trading style changed the moment I switched into reading price actions. Hello, traders. Welcome back to Finspoke, where we break down trading in a simple, practical, and the real way. Today, we are diving deep into price action versus indicator trading. It's a game changer. Forget the textbook talk. This is straight from real training, experiences, wins and losses, and lessons I learned over the years. Let's be honest, we all started here. My chart used to look like this before now, like a rainbow. RSI, MACD, Bollinger Bands, Stochastic, EMA crossovers, everything indicator. That was me back then. At first, it felt powerful. I feel like I have decoded the market secret until the indicators start arguing with each other. RSI says buy, MACD says wait, and price says I'm going wherever I want. At that point, it was a back-to-back losses that started messing with my psychology. That was when I realized that indicators don't predict, they react. Yes, you heard me. Indicators react to what price has already done. By the time RSI screams oversold, most times the market is already reversing. Don't get me wrong. Indicators aren't evil. They can confirm what you already see. Like RSI confirms exhaustion, EMA for trend bias, but they should never lead your decisions. At some point, I got tired of the noise. So I removed every single indicator, just naked chart, as you can see, and raw price. And for the first time, I saw the market clearly. Structure break of highs and lows, supply and demand zones, fake outs, liquidity grabs. It was like I learned a new language, and that is the language of price. Look at this trade. About two trades I took here recently. Price pushed to the upside into a clean supply zone. I quickly mark the area. I didn't panic. I waited for it to push down and give me this double top, or what we call M chart pattern. I set my pending order here, and the moment it returns back here, it executed the trade, and this is it. This is gold. This is a clean chart, no relatively strength index, no crossover Bollinger Band, just reading the price behavior. Just a clear understanding of the stories every candlestick tells. If you can understand how to read this behavior price action teaches you, you will start thinking like the market. And that is when you stop reacting and they start anticipating. Now, here is the truth most traders miss. You don't have to pick a side. It's not price action versus indicators. It's Price action first, indicators second. I call it the clean Confluence method. This is how I use it. Start with structure. You start with reading the structure, identify the trend zone. For instance, price was pushing to the upside here. And the behavior of price, when you get to this level, it starts ranging. There are a lot of things that tells you that price is momentum is shifting from the hand of the buyers to the hand of the sellers. For instance, you can see that the candles are becoming small and a kind of ranging. When you move to the down to the lower time frame, you see that price was actually ranging. Price range a little bit here. When price gets to this place, it could not push higher. It started moving to the downside. Tried to push to the upside again, but could not break this level. And it started pulling down. These things are behaviors. Understand it and you will have a better trading experience. Then the second one is add one or two indicators for confirmation, like the EMA or RSI. What I'm trying to say is that indicators shouldn't be what you use to make your decisions. Learn the price behavior, how the price behave, the behavior, psychology behind the candles. Then use one or two indicators to support it. This is one of the trades I took recently on gold. This one and this one last week before price opened for the new week. Price tapped into this zone. Let me zoom out. Look at this. There was a rejection here. There was a rejection at the top. So I quickly moved down to the lower time frame. I came down to the lower time frame to see what was going on. I noticed this ranging. Remember, market is about 70% ranging and 30% movement. Price ranged here, broke out from the range and give us this double bottom and pushed to the upside, started ranging again. With these small wicks and small buy candles is an indication that buyers has come to the point of exhaustion. They are losing control over the market. Remember, I already marked this zone. So I was actually waiting for all of these shenanigans here. And I set my pending order when I see price approaching to the zone again. I set my pending order. Boom, price came and activated the order and pushed to the downside. That was it. It's not just this one. This is one among many. Do not get me wrong. Indicators are good, but they shouldn't be what you use to make your decisions. Learn price actions first. Market behavior, market language. Learn it first. Then use indicator as a support or as a tool. If you are still finding it difficult to understand the candlesticks and the psychology behind it, I have about 2 videos on this. You can check them. The link is in the description, or you check my trading playlist. You will see a whole lot of videos there that talks about candlestick behavior and even this price action. Go watch it for a better understanding. Now, this trade, I took this particular trade at a retest. When I noticed price reacting here, I know that it will return back here. That is what we call retest. So it returned back to retest this zone before pushing to the downside. This trade didn't work because of this indicator. No. It worked because price told me the story. The indicator was just nodding in agreement. Again, if you look at where the indicator, this is exponential moving average 9. If you look at where the indicator signal me to sell, price has already reversed. So that's what we are talking about. Price action, understanding the behavior will tell you the story even before it happens. This is another trade I took on gold. I took this trade on Friday before the market closed. That was as a result of that push to the downside. The one I took at 15 minutes, this is 5 minutes time frame. It was just a short buy. But price was actually trending to the upside. So I quickly catch this buy. What did I do? Price reacted here as a mini support. I quickly marked my zone and waited for it to return and retest it. The moment price returned, I executed the trade. If you also look at this, you will see that price has already started buying before the indicator confirmed buy. Here is the real talk. No matter how clean your strategy is, without discipline, patience, and confidence, you will still struggle. There's no two ways about it. I am not in the market to catch the whole moves. No, I am in the market to catch the right move at the right time and go out of the market so I can secure what I grabbed from the market and allow the market to do whatever it chooses to do. I have seen traders with the best price action setups still lose money because they entered too early or moved stop losses out of fear. Trading is not about catching every move. It's about catching the right ones with clarity and control. Catch it and leave. So here is my advice. Master price action first. It is the foundation of every indicator out there. Then use indicators as tools, not crutches. If you got value from this, comment price action family below. Hit the like button, subscribe, and share this video with every trader out there. Now that you understand why price action beat indicator dependence, in my next video, I will show you the exact indicators I combine with price action and how to use them for clean, high probability setups and entries. You don't want to miss it. It is a game changer. See you in my next